Puerto Rico Act 60 can save you millions of dollars in taxes, but if you do it wrong, it can cost you a lot of money. In this video, I'm going to show you exactly how we help a client save $5 million in taxes, avoid interest and penalties, and of course, avoid headaches. Hi, my name is Victor Delerme. I'm a CPA, and I help business owners, executives, and investors reduce taxes through strategies so they can reinvest money back into their business, their legacy, family, and what is the most important for them. So let me tell you about my client. My client is a VP of engineering of a multinational company. It's a Fortune 500, and he leads a team that is expanding in Latin America. And the way they do this is they're going to set up a headquarters in Puerto Rico, and then from there, they're going to lead the expansion. As you understand, this role is very important for the company. So the compensation that my client has is very complex. It's got base salary, it's got milestones, but also it's got stock options. It's a very complex structure that allows him to actually do the work that needs to be done and also be compensated accordingly. In 2022, he was given the opportunity to expand the operations in Latin America through Puerto Rico. Puerto Rico was a bridge to Latin America. Most people see this as a career growth. He saw it as something else. He saw it as a structure strategy, tax positioning, lifestyle, and a lot of tax savings. So he accepted the offer. He relocated to Puerto Rico. He bought a townhouse in Old San Juan. He obtained a lease for the operations of the business, a distribution facility. So mind you, everything looks great. He accepted the offer. He relocated, moved to Puerto Rico, bought a nice townhouse in colonial Old San Juan. He went to the industrial district and leased a distribution center for the business to actually start operations of the distribution of their product, their technology. So as you see, everything looks perfect on paper. And here's what happened. All of a sudden, he received a tax notice for the years 2022 and the year 2023 with a $5 million tax assessment from the Treasury office. He said to himself, how is this possible? Everything is perfect. How is this happening? And at that moment, none of it made sense. He was thinking, how is it that I received this letter? My taxes have been filed. All my documents related to Act 60 are in order. I'm a bona fide resident of Puerto Rico. And then he was thinking, what went wrong? And this is where most people do panic. They lose control. They don't know what to do. But in this case, the client decided to search for information. He decided to actually talk to the experts, and he booked a call with us. On the consultation, we understood his backstory, and we understood his situation. We understood where he came from, and we had an idea of what the situation might be. But in order for us to help, we needed the details. You have to understand that once a tax notice is received, if you're not acting quick enough, if you're not acting swiftly, there could be a spectrum of consequences that could be very painful and expensive. You could be subject to interest and penalties, like in this case. Our client received a notice indicating that you owe $5 million, but it includes taxes, interest, and penalties. You could also lose some of the privileges. Like, for example, your bank accounts could be levied, right? You could lose the privileges of banking, and also you could have your passport put on hold by the State Department. And this is something that you truly don't want to do, especially if you're an executive, a VP of engineering of a large company. You have to be able to move from country to country because you have assignments to do. And of course, you have personal commitments like family and so forth. So we jumped in and put the whole picture together. First, we gathered everything: the tax assessment notices, the Act 60 decree, the wage and income statements, the capital gains activity, and the U.S. and Puerto Rico tax returns. And then we did what most tax preparers actually missed. So we understood the backstory. We understood the situation. And then with the information and the data that we received, we put together the whole sequence of events. And we understood what is the source of the problem, what triggered the problem, what were the steps that were missed originally that triggered this whole situation: the assessment, the tax assessments, the interest and penalties. Basically, we wanted to understand what is the root problem. And the only way you can do this is by actually having conversations with your client. This is why we are advisors, business advisors, and CPAs, right? Because we understand exactly where our client has been, where he is or she is, and where is it that they want to go. So that's why having the sequence of events is key, because we're stepping in our client's shoes and we are basically thinking exactly what happened. And as experts, then we are able to put together a plan, a strategy in order for the problem to be solved. And once we obtain all the requested documents, this is how we review them, and this is how we reconstruct the line of events. The first thing, we reviewed all the employment agreement. Remember, he has a compensation structure that is got a base salary, milestone, and stock compensation. That is very important because in order for him to receive the stock compensation, he has to perform. His whole department in Puerto Rico, in Latin America, needs to perform in order for that compensation to be effective. We analyze the structure of the compensation, and then we examine the Act 60 application and the qualification. We understood exactly whether precisely or not my client actually qualified for Act 60 and then whether the application was properly filed and processed by the offices in Puerto Rico. And then we established and confirmed that he's a bona fide resident of Puerto Rico. Mind you, people that are Act 60 holders, that are investors and are exporting services in Puerto Rico, they need to be a bona fide resident of Puerto Rico for the most part. So that's key in determining whether our client actually was in compliance, in full compliance for the Act 60 requirements. And these four key elements are very important because in the case that Act 60 is challenged, then we have the support documents in order for us to be able to defend the case with the tax authorities. We review the U.S. tax returns and we also review the Puerto Rico tax return. And this is exactly where we found the mistakes made. The issue was not the move to Puerto Rico. The issue was not the tax decree. The issue was incorrect reporting. Now, remember that I did share with you that our client's compensation is complex and is structured in a way where he has base salary but also stock compensation while he's a bona fide resident of Puerto Rico. The mistake that the prior professional did was that the capital gains were recorded and were reported in the wrong section of the tax forms. Now, when that happens, the Puerto Rico Treasury is going to treat it in the wrong way. And then it's going to be taxed at the maximum rate. And then, of course, it's going to be subject to interest and penalties because then what? The taxes were not paid on time by the right amount. So then therefore, interest and penalties are assessed. Now that mismatch of incorrect reporting on the tax returns where the capital gains was incorrectly reported in the wrong section, that is actually what triggered the $5 million in taxes, interest and penalties. So we decided to take control of the situation for our client. We were engaged and the first thing we did was actually put together a power of attorney that we shared with the Puerto Rico Treasury as well as with the IRS. What a power of attorney does, it gives us authorization to represent the client in front of the tax agencies in regards to tax matters pertaining to a period of time. So we got power of attorney for Puerto Rico, and then of course we have power of attorney for the U.S. Treasury, for the IRS. And then this is key, this is very important because when you are doing an assessment related to tax matters, you need enough time in order for you to be able to put together a response for the case. So that's exactly what we did. We requested additional time, both agencies. We indicated to the agencies that we are legally representing the client, and then we're requesting additional time in order for us to have a proper response to the tax assessment letter. That is going to do two things. Number one, once you are putting a letter in response to a tax assessment along with a power of attorney, you're putting, in essence, a stop on collection efforts from the tax agencies, right? So the $5 million assessment is not going to accrue any more interest and penalties while our representation is in effect. So then the IRS or the Treasury is not going to force any collection, is not going to put any levies on the bank accounts. And of course, number two, is not going to put his passport in jeopardy. This is very important as well. When we are requesting additional time, our CPAs and attorneys are actually looking into the details to the documents that the client shared with us. And then this is where we start assembling a strategy, assembling all the documents, assembling all the amended returns. We are putting together the correct calculations. So requesting additional time is key because you're going to have enough time in order for you to do things properly. The calculations are going to be done correctly. The tax decree is going to be implemented correctly, mind you, because the filings were not done properly. Instead of being taxed at a 0% in Puerto Rico under Act 60 for capital gains, he was being taxed at the maximum rate. So the response needs to be clear, needs to be concise, and then needs to have all the evidence that needs to be presented in order for the amended returns to be put together and be filed. So this is why it's key to have power of attorney, and also it's key to have enough time for all this documentation to be put together and then presented. With all this information, our team felt confident that we had all the tools, all the support evidence and support documents that we needed to have in order for us to be able to support our client. So let me recap the process. We validated all the information from the client. We obtained all the relevant data that we needed to have in order for us to present a defensible case. We drafted the amended returns. We took the information that the client presented us, the original returns from the U.S. Treasury and the original returns from the Treasury in Puerto Rico. And the reason we did this, we need to validate, is because we need to make sure that by the time we go and present our amended returns and our case to the agencies, we need to be certain that our response is going to be effective. We're not going to present an amended return. We're not going to present a defensive case if we believe that all the information or some of the information is actually missing. So we don't want to do that. That's why validating the information is so important. Then we presented the amended tax returns to the tax authorities, in this case to the Puerto Rico Treasury. On the filings, here's exactly what we did. We showed what the original numbers were, how the original numbers were presented on the returns. Then we presented on the actual forms our proposed adjustments. What is the information that was incorrectly presented? And then we have the final numbers. The final numbers are going to show you exactly what the numbers are going to be after the adjustments. So first you have original information, original numbers. Then you have the proposed adjustments, which is the work that we did for our client. This is actually what's going to help them save, in this case, the $5 million in interest and penalties, as well in taxes. And then you have the final numbers. So as you see, the adjustments is key. But the way we get to the adjustments is by doing all the research that we did for our clients. You cannot present adjustments without actually validating all the relevant information. That's why having CPAs, advisors, and attorneys involved is key once you're presenting a case like this with the tax authorities. And the result was a great result. We help our client avoid a $5 million tax assessment with interest and penalties. And of course, now he's happy, he's stress-free, and he doesn't have any headaches, thanks to the support that our team provided to him. So this is what most people actually get wrong about Puerto Rico Act 60. It's not about only moving to Puerto Rico. Like, you're just not moving there. You just have to make sure that you are executing the strategy correctly from day one. As you saw, our client actually thought he was doing the right thing, but he had some mistakes in the foundation. So it's not about just moving to Puerto Rico and just believe that you're just going to be filling out some tax form and presenting those to the agencies. You're just going to make sure that your strategy is executed properly from day one, because it's key. When it's done right, you don't just get tax benefits. You actually get peace of mind. You get clarity, because now you know that you are achieving a 0% tax rate. Now you know you are achieving a 4% tax rate. The reason for this is because you know your strategy is done correctly, it's done clean, it's done legally, with a team of professionals that know exactly what they're doing, and they have your back. Now, if you're under Act 60 or you're considering it, but you're not sure about the structure, you're not sure whether your application was done properly, you're not sure if your annual compliance is in check, you don't know if your tax returns both in the U.S. as well as in Puerto Rico are done correctly, I can help you. My team can help you. So go ahead and book a call with us, and we'll give you a consultation. We're going to review all your documents, and actually we're going to hear your story. We're going to understand more about your business, and we're going to understand more about your investments. We're going to get to know you. We're going to understand where you come from, the reason you moved to Puerto Rico, and what your financial plans are. And once we do that, then we're going to understand more about your documents. We're going to review your documents, your Act 60 documents, your tax returns in Puerto Rico, your tax returns in the U.S. We actually may be able to review your tax returns before the move to Puerto Rico, because that's going to give us clarity on why the reason you moved to Puerto Rico, and help you understand what are some of the savings that you actually had when you transitioned from the U.S. or from wherever you are to Puerto Rico. So go ahead and book a consultation with us, and our team will be here to help you. My name is Victor Delerme. I'm a CPA, and I'll see you soon.